Hi friends, my name is Krishna. Welcome back to my YouTube channel. Today's topic is going to be again on journal entries. I'm going to take one illustration from Institute material, CA Foundation from Institute material, and I'll explain to you. Similar way, I'm going to take another two illustrations and upload two more videos. In total, I can say 3 videos I'm going to do for journals. With that, this journal chapter will be completed and we move on to the next chapter, ledger. As I promised previously, I'm going to upload every alternative day one video. Please like the video if you like the content, subscribe to my channel, share this video with your friends and colleagues. Let us move on to the topic. Okay guys, let us look into this problem. As I said previously, this example I have taken from Institute material. Fifth illustration, our Institute material. Right? Okay. So what is the problem says? Journalize the following transactions. Also state the nature of each account involved in the journal entry. So they are asking us to talk about the nature of the account as well while doing this journal entry. I generally, whenever I explain the journal entries, how I explain, right? What comes in, what goes out, what type of account, what is the golden rule, everything I explained in detail, so that fundamentally you would be very strong in terms of preparing the journal entries. That is the intention behind it. Even you can see that in Institute material as well. Institute is also asking, first you need to prepare the journal entries, but you also need to tell me what type of account it is, right? So you need to be very careful while preparing the journal entries. Let me start with first one. First one is what? Ajit started business with capital of 4 lakhs. Okay. So Ajit is the proprietor. He started his business with 4 lakhs capital, right? So how do we do this journal entry? So as I said, as per business entity concept, proprietor is separate, business is separate. So when Ajit is bringing capital into the business, what comes in? Cash. What goes out? Nothing. Who is the giver? Ajit, right? So cash comes under what type of account? Real account. Ajit comes under what type of account? Personal account. I'm going very fast because all these things I have already covered in my previous videos. So I'm going very fast. Ajit comes under personal account, cash comes under real account. What is the principle under real account? Debit what comes in, credit what goes out. What is coming here? Cash. So you need to debit cash account, and Ajit comes under personal account. Debit the receiver, credit the giver. He is giving. So you need to credit Ajit account, right? Instead of crediting Ajit account, we credit capital account. So capital account is a personal account. What type of person? It is a representative person, right? This is the meaning of this transaction. Okay. Next, he withdrawn cash for business from the bank. He in the sense Ajit. Ajit is a proprietor. He withdraw the cash from the business from the bank. So business bank account, he went and withdraw the amount for his personal use. So this is the business, right? So proprietor took the cash, right? From where? From bank. Who is the giver? Banker is the giver. Banker is paying this amount. Which banker? Business own banking. Business is having some balance in their bank account. From their bank account, he took some amount for his personal use. So who is the giver here? Banker is the giver. And who is receiving it? Ajit. Right? So Ajit comes under personal account. Bank comes under personal account. What is the principle? Debit the receiver, credit the giver. Who is receiving here? Ajit. So what we do? Ajit account debit, and banker is a personal account. He is giving, credit the giver. So you need to credit bank account. Instead of debiting Ajit account, what we do? Drawings account. So the entry is going to be drawings account debit and bank account credit. Drawings is what type of account? Personal account. Why it is personal account? Because it is being debited on behalf of a person. Hence drawings account is a personal account, that too representative person. Bank anyway, you know, it is a personal account. Clear? Let us move on to the next one. He purchased goods and making payment through bank. Ajit purchased goods. That means what? Business. Business purchased goods. When we purchase goods, what comes in? Right? What goes out? Here he purchased it through bank. So our bank in the sense business bank paid this amount. Who is the giver here? Banker is the giver. So when goods comes under what type of account? Real account. Bank comes under what type of account? Personal account. Real account principle, debit what comes in, credit what goes out. So goods are coming. So you need to debit goods account, right? Banker comes under personal account, debit the receiver and credit the giver. He is giving. So bank account credit. So instead of goods account, you can also debit purchase account. You can also do purchase account debit. So entry is going to be purchase account debit to bank account. Clear? Right. Next one. He sold goods 16,000 and received payment through bank. He sold goods 16,000. So he in the sense Ajit. Ajit sold goods. When he sold goods, what goes out? Goods. Amount received by whom? He paid directly. He received, no, the customers paid the amount to directly to the banker. So banker is the receiver of the cash, not goods. Sorry. Here doesn't have any relation to goods. Banker received the amount from the customers and goods has gone to the customer's account. So goods comes under real account, bank comes under personal account. Personal account principle, debit the receiver, credit the giver. Banker is receiving this amount, so bank account debit. Goods going out, real account, debit what comes in, credit what goes out. Here goods going out to goods account or to sales account. To sales account. This should be the entry. Next, he purchased furniture paid by check, 2,500. So he in the sense Ajit. Ajit purchased furniture. If he purchased furniture, furniture comes in. Then what goes out? The amount was paid by the banker because he paid check. Amount was paid by the giver by the banking. Bank has paid that amount to the where we purchased furniture. So furniture comes under real account. Bank comes under personal account. Real account principle, debit what comes in, credit what goes out. So what you are supposed to do, furniture account debit and bank account is the giver, personal account. Debit the receiver, credit the giver. He is the one paid that amount to the furniture, the one who sold the furniture, right? So you need to credit bank account. Clear? This is the entry. Next, he sold goods to Arvind 2,400. So business sold goods to Arvind. Did he say that he sold goods to Arvind for cash? No. That means what? Goods sold to Arvind. Since he did not mention about cash, these goods were sold to Arvind for credit. That should be the assumption. So when we sold goods, what goes out? Goods goes out. What comes in? Nothing, because these goods were sold for credit. Then who is the receiver? Arvind. Right? So Arvind comes under personal account. Goods comes under real account. What is the principle? Arvind, debit the receiver. He is receiving. So we are debiting Arvind. Goods going out, credit what goes out is applicable. So to goods account. So Arvind account debit to goods account. This should be the entry. Next, he purchased goods from Amrit for 10,000. He purchased goods from Amrit. So when we purchased goods from Amrit, did he mention goods purchased from Amrit is for cash? No. That means what? We purchased goods for credit. Then when we purchase goods, what comes in? Goods. What goes out? Nothing. Who is the giver? Amrit. Right? So then Amrit comes under personal account, goods comes under real account. So real account principle, debit what comes in. So you need to what to do? You need to debit goods account and giver is Amrit, so you need to credit Amrit account. Clear? This should be the entry. Next, he returned goods to Amrit 500. So he returned goods to Amrit. When he returned goods, what goes out? Goods. Right? What comes in? Nothing. When goods are going out, who is the receiver? Amrit. So what entry we need to put? Amrit is receiving, so debit Amrit. So Amrit account debit, goods are going out. When do we return the goods to them? See here, we purchased goods from Amrit and we are returning 500 worth of goods, maybe because those goods would have been damaged, right? These are purchase returns. So Amrit account debit to purchase returns account you need to put. This should be the entry. Clear? Then he received from Arvind 2,300 for full and final settlement. Sorry, he received from Arvind, not Amrit. He received from Arvind 2,300 in full settlement. How much we sold? You see here, we sold goods to Arvind 2,400 and we received how much? 2,300. That means what? 100 rupees discount given by Amrit. Sorry, Arvind. So what we need to do? When we receive cash from Arvind, 2,300 cash comes in, right? 2,300 cash comes in. Who is the giver? Arvind. There is some problem with my pen, guys. Excuse me this time. So, cash received, real account, cash account debit 2,300, right? And we gave 100 rupees discount to him. The discount is an expenditure for us. All expenses and losses are to be debited in nominal account, right? So, we need to debit discount allowed, debit 100, right? Then who is the giver? Arvind. So credit Arvind account for 2,400. Clear? This should be the entry. Next, he withdraw goods for personal use, 1,000. This I discussed in my previous video. So he withdraw goods. When Ajit withdraw the goods, what goes out? What comes in? Nothing. When goods are going out, who is the receiver? Arvind. So Arvind comes under personal account. Goods comes under real account. Arvind is receiving, receiver to be debited. So Arvind account debit. Goods are going out. Real account principal, debit the receiver, debit what comes in, credit what goes out. Goods are going out. So you need to credit goods account. I said we need to make some small change here. Since Arvind is, not Arvind, his name is Ajit here. I'm sorry for that. So Ajit account debit and goods account credit. Instead of Ajit account, what we are supposed to do? Drawings account. Drawings account debit, and instead of goods account, you can also credit purchase account. This is what I explained in my previous video as well, right? So this should be the entry. Next, he withdraw cash from the business for personal use. He withdraw the cash from business for personal use. Then what entry we debit? So cash goes out, nothing comes in. Who is the receiver? Ajit is the receiver, right? So again, Ajit account debit to cash account. Cash is real account. Real account principal debit what comes in and credit what goes out. So I created cash. Ajit I debited. Instead of Ajit, what do? I debit drawings account. Drawings account debit to cash account. This is very simple. Next, he paid telephone charges 10 rupees. Telephone charges. Telephone charges is what? It is an expenditure. All expenses and losses, what we are supposed to do, we debit in as per nominal account. So telephone charges, debit, right? So when we pay the telephone charges, what goes in? Cash. So we need to credit cash as per real account. So cash account is credited. Telephone charges account debit to cash account is the entry. Next, amount paid to Amrit in full settlement 9,450. This is very important point. How much we purchased goods from Amrit? 10,000, right? We purchased from Amrit 10,000 and we returned goods 500. So how much we are supposed to pay him? 9,500. How much we paid? 9,450. So 50 rupees we did not pay, but this is a full settlement. When we say full settlement, this 50 rupees, whatever we did not make the payment, that will be considered as discount received from Amrit. Discount received from Amrit. That is, gain for us, right? So what do we do? How do we post this entry? So Amrit account debit 9,500. This is the amount we need to put because this amount we already posted an entry. So total purchase 10,500 we already returned. What is left now? 9,500 is left. So Amrit account debit 9,500 to cash account 9,450 to discount received account 50. This is how the entry has to be posted. Amrit, why we debited? Because Amrit is the one receiving the cash, hence we debited. Cash, why we created 9,450? Because we paid only 9,450 to him, so cash account 9,450. And discount received is an income or gain for us, so I credited 50 rupees as a gain in my account. So this is how the entry has to be posted. Next, paid stationery 200, rent 5,000 and salary is 2,000. All the three are expenses, right? When all the three are expenses, we can write one combined entry. What do we do? All expenses and losses are supposed to be debited as per nominal account. So stationery account debit, rent account debit, salaries debit to bank account. Sorry, cash account. Cash gone out. So you need to credit cash account. That's all. This should be the entry for this, right? Then goods distributed by way of free samples. This is very important point, guys. Goods distributed for free of samples. Why do we distribute free samples? We do distribute the samples, free samples to the public as a part of our advertisement. So whenever you see free samples, that expenditure we need to consider as an advertisement expenditure. What do we need to do? We need to consider that as an advertisement expenditure. Advertisement expenditure is an expenditure, comes under nominal account. All expenses and losses have to be debited. So you need to do advertisement expenses account debit. And what is that you distributed? Goods. So these goods are going out. So you need to credit account. So advertisement expenditure account to goods account. This goods, instead of creating goods, you can also credit purchase account. Because whatever goods you purchased, those purchased goods have been used for free sampling, right? So you can credit purchase account. This kind of explanation I have given for goods used for by the proprietor for his personal use. That time also I said instead of creating goods, you can use purchases because these goods were purchased previously and being used by the proprietor. Here also same. These goods were purchased previously and used for free sampling for advertisement purpose. Hence, instead of creating goods account, you can credit purchase account. So this is how the journal entries have to be posted for the illustration given in Institute of Chartered Accountants of India in their material, CA Foundation material, right? So this is an example I explained, and I'm going to explain another two problems, and I'm going to close this journal chapter. I hope you like the content. If you like the content, please like my video, subscribe to my channel, and share this video with your friends and colleagues, right? Thank you so much.